Hello viewers, welcome back to the series Bhaskar's Insurance for You and Me. Like in our last episode, we will deal with few more frequently asked questions on motor insurance in this episode also. We'll try to answer the following issues related to motor insurance in this episode. What are the different ways of vehicle ownership change and how it impacts insurance? What are the policy exclusions related to drunken driving under motor insurance policies? What is the coverage provided under liability to paid driver add-on cover? What is customer information sheet and what is its usefulness? What is certificate of insurance and how is it different from policy document? We'll first examine the question what are different ways of vehicle ownership change and how it impacts the insurance. The transfer of vehicle ownership occurs through different methods like sale purchase to the purchaser, gifting process to the giftee, transfer from company to individual employee, or through legal process to the legal heir in case of death of the original owner. The procedure to be followed and the timelines for the transfer of ownership through the vehicle registering authority is detailed in the Motor Vehicles Act, and such transfer of ownership has impact on the cover validity and the premium discount under the insurance policy. So now, as far as the cover validity is concerned, we will see the timelines and the need for getting the insurance transferred to the new owner after the new ownership is registered. Regarding third-party liability cover, when vehicle ownership is transferred, the liability only cover is deemed to be transferred to the new owner automatically from the date of ownership transfer. However, the transferee needs to apply to the insurer for the change of insurance to the new owner within 14 days of such transfer. If there is no such transfer request made to the insurer by the new owner, the liability cover ceases after 14 days of the transfer. Hence, it is important that any change of ownership is informed to the insurer within the 14 days of such transfer to ensure continuation of third-party liability cover. Of course, there are cases where the courts have taken lenient view and ordered third-party claims to be paid by insurers, even though the information on transfer of ownership was not given by the new owner to the insurer. But it is advisable for the insured to fulfill the legal requirement of intimating the ownership change within the prescribed time to ensure continuation of cover, rather than hoping for a legal leniency. In case of wound damage cover, the policy is transferred to the new owner only after receipt of the specific request from the new owner, along with the new proposal form, proof of sale, and fees and additional premium for the transfer, if any. Till such request is received, along with other details, the insurance cover on wound damage portion ceases. The new owner shall remain without insurance cover from the date of transfer. Another scenario is where the ownership of the vehicle changes due to death of the owner. In the event of the death of the sole insured, the insurance policy will not immediately lapse but will remain valid for a period of 3 months from the date of the death of insured or until the expiry of the policy, whichever is earlier. So during the said period, the legal heir of the insured to whom the custody and use of the motor vehicle passes may apply to have the policy transferred to the name of the heir or obtain a new insurance policy for the motor vehicle by providing appropriate proof of title to the vehicle. The other issue is the impact on NCB when the ownership changes, that is eligibility for no claim bonus. As we have already seen, no claim bonus is a discount given by insurance companies to insureds when there are no claims made under the policy. It is a reward for safe driving and responsible ownership of the vehicle. As a result, the NCB follows the fortunes of the original owner of the vehicle. In other words, the discount is for the owner and not on the vehicle. So whenever there is change in ownership of the vehicle and the policy is transferred accordingly, NCB provided under the policy also changes. So where there is transfer of ownership and policy from one insured to another, the NCB will not be transferred to new owner. However, the NCB is transferred to new owner if the custody and use of the vehicle passes on to the spouse or children or parents of the original owner as legal heir due to death of the original owner. In cases where the ownership of vehicle is transferred from an institution to an employee, the NCB earned on the vehicle owned by an institution is also passed on to the employee if the vehicle was allotted to and exclusively operated by the employee during the period in which the NCB was earned. The next question we will discuss is what are the policy exclusions related to the drunken driving under motor policies. There are different claim scenarios possible, and let us discuss them one by one. Regarding the own damage claims, the motor policies carry an exclusion under own damage section of the policy, stating that the company is not liable to make any payment in respect of any accidental loss or damage suffered while the insured or any person driving the vehicle with the knowledge and consent of the insured is under the influence of intoxicating liquor. From this, it is clear that own damage to the vehicle due to an accident when the vehicle driver was under the influence of liquor is not admissible for payment under the policy. So no claim is payable for loss or damage to the vehicle due to accident when the driver is under the influence of liquor. Regarding the personal accident claims, the policy wordings related to the personal accident cover either for owner driver personal accident or for any persons other than the owner driver under the motor policy carries the following wordings. No compensation shall be payable in respect of death or bodily injury, directly or indirectly, wholly or in part, arising or resulting from or traceable to an accident happening while such person is under the influence of intoxicating liquor. This indicates that no personal accident claim under the motor policy is payable if the injured, that is, or the deceased, was under the influence of liquor at the time of accident. Regarding the third-party liability claims, the motor policy wordings do not carry any such exclusion under the section for liability for third parties or even under the general exclusions of the policy. Hence, the claims by third parties due to accident, while the driver of the insured vehicle was under the influence of liquor, cannot be denied. This is probably due to the fact that the third party who is injured in the accident has no control on the behavior of the driver of the vehicle and cannot be penalized. Hence, the third party liability claims, whether it is injury to third party due to accident when the vehicle driver was under the influence of liquor, are payable. However, driving or attempting to drive a motor vehicle while under the influence of alcohol is a punishable offense under Motor Vehicles Act, and appropriate penal action would be taken on the driver. The next question we'll discuss is what is the coverage provided under liability to paid driver. The motor policies provide for covering legal liability to paid driver or cleaner or conductor, commonly referred as a paid driver liability cover or paid driver cover. If the insured has opted for this cover, that is, opted for paid driver liability cover and paid the necessary premium, the policy is endorsed to cover the legal liability to the paid driver or conductor or cleaner, as the case may be, who is employed in connection with the operation of the insured vehicle. So under this extension, insurer pays the legal liability of the insured under Workmen's Compensation Act 1923. It is now known as Employees Compensation Act, and other laws. In case of such employee getting injured in course of employment due to an accident arising out of the employment, the claims are preferred under the Employees Compensation Act generally. The Act provides for payment of compensation towards various contingencies like death, permanent total disablement, permanent partial disablement, wages payment for temporary disablement, and reimbursement of medical expenses if any incurred. So the claim amounts are calculated as per the fixed formula provided in the Act. It is important to note that except in case of death or permanent total disablement claims, other claims due to accident which is directly attributable to the employee having been under the influence of drinks at the time of accident are not admissible under the Act itself. Hence, these claims are not payable under the policy. In other words, the claims are payable under the policy even if the injured employee, the driver or cleaner or conductor, was under the influence of drinks, only in case where the injury results in death or permanent total disablement. So if there is a claim under the Workmen Compensation Act, under the extension for liability to the paid driver, and the claim is for other than death or permanent total disablement, the claims would not become payable if the person is under the influence of alcohol. The next question we'll discuss is, what is customer information sheet that is being provided as part of the motor policy, and how is it useful to the insured? The customer information sheet, briefly known as CIS, is a document that must be given to every retail customer along with every policy. The purpose of the document is to provide the basic features of the insurance policy in simple terms, so that customers who may find the policy terms and conditions to be complicated can read the information in the customer information sheet and understand the cover easily. The standard format of CIS was devised by IRDA, and all the insurers need to follow the same format for providing to the customers. The CIS provides information on the various aspects of insurance, like the structure and scope of coverage, add-on covers which are applicable for the policy, the basis of sum insured and deductibles, major exclusions, special conditions and warranties if any, the principles of admissibility of claims, claim procedure to be followed and documentation required, the policy servicing aspects, grievance redressal mechanism and insurance ombudsman details, and also the obligations of the policyholder. A careful reading and understanding of the CIS will help the insured to ensure compliance and with the policy terms and enable a smooth claim process. The next question what we look at is, what is certificate of insurance under motor insurance and how is it different from a policy document? Whenever we take any type of insurance, the details of the risk covered, the cover provided, the applicable exclusions, conditions and warranties, they are all included in a document and issued as an insurance policy by the insurer. The part of the policy which carries details of risk covered is referred as policy schedule. However, in case of motor insurance, insurers issue an additional document known as Certificate of Insurance, briefly COI. The Certificate of Insurance is a certificate issued by an authorized insurer confirming the existence of a valid insurance policy covering the vehicle and providing the cover details to comply with requirements under Section 147 of Motor Vehicles Act. The Certificate of Insurance provides evidence to authorities that the vehicle is covered under an insurance policy that covers third-party liability as per the requirements of Motor Vehicles Act. The information required to be shown in the Certificate of Insurance includes the vehicle information like registration number, make, model, description, engine and chassis number, carrying capacity, etc. The insured details like name, address. The insurance details like policy number, period of insurance, persons who are entitled to drive the vehicle insured, the limitations to use, and also a confirmation from the insurer stating that we hereby certify that the policy to which this certificate relates, as well as this certificate of insurance, are issued in accordance with the provisions of Chapter 11 of the Motor Vehicles Act 1988. So many insurers are combining the policy schedule and the certificate of insurance and issuing a single document to insureds, which is referred as policy schedule cum certificate of insurance. So as per Motor Vehicles Act, any person driving a motor vehicle in any public place has to produce a certificate of insurance in addition to other documents like RC, DL when asked by a police officer in uniform. Hence, it is essential for the vehicle owner to carry these documents in the vehicle while in public place. So in the last 6 episodes, we have discussed various aspects pertaining to motor insurance in India. This covers substantial aspects pertaining to your motor insurance policy. I'm sure that the information provided in these episodes is of help to you in understanding your vehicle insurance better and help you to deal with your insurance claim, if any, with confidence. If you need details on any other topic relating to motor insurance, please write to me and I will try to present a separate video on the same. We will meet again in the next episode with a different topic in insurance. Till then, bye from Bhaskar.